What's up, YouTube? So we're gonna go over GME, another bull case. For GME, I'm actually just gonna go over everything on GameStop bull case, but let's just get right into it. So we have a lot of. I went from my last chart was Elliot wave. My last chart was Wyckoff schematics. Just changing it up a little bit. So we're gonna look at, these are called harmonics. I don't know if you've heard of that before, but so this first one is a bullish Gartley, and this is the structure of the bullish Gartley here on the left, illustrated here. So we hit the 0.382 retrace, a beat of A to C. We hit this one is a bit longer, but we did hit near the 0.886 extension from X to D, and then the B to D was a 1.272 extension. So this looks legit. I mean, it makes perfect sense. It lines up perfectly. So I think this is in play, and so the targets as seen above. Profit targets, take partial profits at each XA Fibonacci extension level. So I have listed here the 1.618 extension, the 2.618 extension, and the 4.236 extension. So this could take us to 150, 244, or $395. Just as an extra throw in, we have this diamond harmonic. So this is called an extended diamond pattern. So again, we hit the 0.382 extension from A to C, and then we hit the 1.272 extension on B to D. So these are just two things that are corresponding together, two harmonics that are kind of in confluence with each other. And this is just another bull case for GME, and it's just fucking beautiful. It's just beautiful. There's nothing else to be said. So that's our harmonics. This is our harmonics. So this is our profit target area with the bullish Gartley and the bullish extended diamond pattern. If we go back to our GME chart here on the daily, I'll just go over this again for any new viewers. Let me just make that way smaller. It's okay. Here we go. So again, besides the obvious point that this just looks like a bull flag, this does line up as a Wyckoff reaccumulation trading range. Now, I kind of was thinking the other day that, if we delete this channel, if we made this kind of like, kind of more like a pennant, something like this could make sense as well, because you could bring your automatic rally all the way down here, and then the structure would make more sense. You have your preliminary supply, your buying climax, automatic rally, all the way to a secondary retest. Sorry, this is just getting so messy. Honestly, yeah, let me just copy all this into a new chart. I'm gonna make a new let me make a new layout real quick. Create new layout, GME redo. Okay, and now we have so let's just go over this again. Sorry, the last chart was just so messy. We put this in logarithmic, however you say it, logo. Let's base this on here. So yeah, so instead of as like making a channel here, which I think that's 100% valid, if we take the bottom here, kind of make something like this. So this is kind of more like a descending wedge type pattern. This can make more sense for this Wyckoff reaccumulation. honestly, we could bring this down and bring that up here. Yeah, that makes more sense for me. So we could do something like this, where you run up, you do have your preliminary supply, you have your buying climax, automatic rally into a secondary retest, and then you do have your creek here, and then this is the jump across the creek. You have your Buick, which is a backup to retest this pennant breakout, and then you do have your traditional pennant targets like this. Okay, that's pretty insane. I don't know if we should. I don't know if that's appropriate, but so this is our Wyckoff schematic. So that's what I was kind of having trouble with. Is like, I think the channel should be more uniform. Something like this is making more sense to me, but this kind of deep retrace is kind of throwing me off here. So maybe we can put that on the back burner for now. So if we go over Elliot wave here on this chart, let's go back to the daily. So yeah, we have our ABC pattern. As you can see here, it's called a zigzag pattern, bear markets, Elliott wave. So we have wave A, wave B, and then wave C. And then within wave B, I think we have what's called a zigzag correction. So this is our wave A, as I said in the previous video. So we have 5 wave move up in our wave A. You have 1, 2, 3, 4, 5, and you're probably asking, okay, why is this 5th wave not beyond the 3rd wave? Well, I think it's a 5th wave failure. And why did it fail? I think because we had such an overextended 3rd wave, and you had an insanely deep retrace of wave 4, that those conditions were met for a 5th wave failure. And so I think that's what we're seeing. We're seeing a 5th wave failure. This 5th wave was not able to make it to higher levels and instead failed. And so that's our wave A. And then in our B wave, again, we have this zigzag correction. So you have 1, 2, 3, 4, 5 wave move down, A, B, C correction to the upside, another 5 wave moves down. So 1, 2, 3, 4, and 5. And so after we complete our zigzag correction, our C wave will be to the upside. And I think that we're going to get a 5 wave move here. I think we're already starting a 5 wave move, as you can see here. I think this is 1, this is 2, and then we should be seeing a 3rd wave. So this 1.618 extension of our initial wave 1 is sitting at around 97.52 cents. So 97 to $100 is our target for our 3rd wave here. So that's our target for GME if this is a 5 wave move to the upside. So that's Elliott wave. So I mean, you have to think that we have 3 different things going for us. We have Elliott wave going for us, zigzag correction. You have Wyckoff reaccumulation going for us. Our daily chart is looking bullish. If we go to our harmonics, I mean, we're looking bullish again. We have a bullish Gartley. We have a bullish diamond pattern. It's kind of hard to make a bear case at this point for GME. I mean, it's just looking incredibly bullish. I mean, you have multiple different trading strategies, multiple different confluences coming together and saying, hey, this shit's really fucking bullish. Like, so I'm bullish. There's no other way to really look at it for me. And I do have, you have to be a good trader. You have to be realistic with yourself, and you do have to make contingency plans if this thing does end up getting bearish. And I know that those type of videos aren't popular, and I am an ape. I am a holder of AMC and GME, and I'm here for the long term. So, in my opinion, we're super fucking bullish, and this is just something that I drew up tonight. I wanted to update you guys on this. So, our targets for this bullish Scartley is again 151, 244, and then 395. And yeah, we can go over AMC really quickly. AMC, I haven't been giving as much love. I really need to. So this is our daily outlook on AMC. We have two channels kind of going on here. You kind of have this pennant formation here. I can change the color. So we kind of have like this like pennant formation here. Kind of going on that we broke out of. So we broke out of this pennant and then got rejected in this kind of bear flag channel. Now, I mean, objectively, this is a bear flag, to be honest with you. But if we hold this level and we bounce up to go retest, preferably we need to break this, the top of this bear flag, use it as support, and then bounce and retest the 640 to so $6 to $7 zone. So I would mark these levels on your AMC chart for the daily. We do want to see, as I showed here, a U-shaped recovery, so we need to be using these levels as support going into the rest of this week, and make it back into this channel. What is this channel? Well, if we go to the daily, this is a 2-year long channel. It's a 2-year long channel. So we had our initial trend long, we had this distribution, we had a falling through the ice, and now to get bullish again, we need to get back into this channel. So channel sitting around $6 to $7. We need to retest this and then move up to the top of the channel and use that as support at around $20 to $23, depending how long it takes to get there. Once this happens, again, in my previous videos, we went over this horizontal level. So this is our next target after, if we start using the top of this channel as support, we could break to the upside to $120 to $140, right where the last peak of this initial run-up was here. So this is my next point of interest if we're able to break the $20 to $23 mark on AMC. So that's our AMC plan. Our GME plan on the daily is, we can go over this again. Actually, this is on the other chart. So GME and AMC Wyckoff charts. If we go, here we are. Yeah, let me put this right here. Make this larger. If we go down to the 5 minutes, let's go down to 5 minutes here. Under that image. Okay, let me go back to the daily. Let me just copy the image. That'll just be easier. So if we go back down to the 5 minutes, I don't know if you guys were in my live stream or not, but I went over this. So this is a Wyckoff accumulation. So we have our trend shorts. We have our automatic rally, and then this is our spring. So right here is our spring where we retested the top of the channel, spring, and so we bounced with an up thrust out of the channel with a lot of volume, which is a good sign. And then we came back and retested. We retested the accumulation zone. So this is really bullish for GME, so we can go back into a trend long again. So preferably, so we came back, retested, so we can, preferably we come back up, maybe to this rolling VWAP, come back down and retest this 23.42 point, and then we're able to break this gap right here at 27.77 and use that as support. So that's our idea going into tomorrow, going into the rest of the week. is to be able to use this area as support and then break this 27.77 mark on GMEs to fill this gap, and then start using that as support. So that's our plan going into next week. That's pretty much the whole video, guys. So yeah, I mean, I'm extremely bullish. There's a lot of reasons to be bullish on GameStop. So yeah, I just wanted to put another kind of thesis, another kind of technical analysis type thing, go over harmonics, and I'll see you guys in the next video. Thanks for watching.